listening to Pre-Market Prep. I'm Brianna Valesky here with my co-host Dennis Dick. We're joined by Anne-Marie Baiynd. She's an author and financial analyst. Anne-Marie, thank you so much for joining us on this Monday morning. How are you doing today?
Glad to be here, doing great, taking a look at the market's bounce off of, chatter in the big sideways action that we are generally sitting in.
Anne-Marie, I'm excited to get your technical opinion here this morning because I'm looking at these charts and I'm looking, we had major resistance last week around 2070 in the E-mini futures here. We have bounced up. We've been as high as 2087 in pre-market trading. We pulled back off those highs slightly up here at 2081, but it's looking like a little bit of a technical breakout out of the top of this range. Are you believing this, or is this going to be kind of like a buy on rumor, sell on news thing at 9:30, or the seller's going to come in?
Well, I do think this is resistance. I think that there are a lot of people that are very eager to watch the chart move higher, but I see in the ES a little bit of a rising wedge that has broken, and now we're coming back up into that midline space. So I suspect that we could have really a little bit more of a punch to the upside, but this does not have the technical strength to hold. It's got to come back down and retest these levels. So any punch to the upside should not continue. My thought is if it does blow off to the top, it's going to be exactly that, a blow off top. Going to stop at the most around 2099, and then we're going to retrace. Could it be that we're ready to move back up and give us that last press to the upside? Yes, but it's not today. We're not going to start a run. I don't see anything like that. And so as far as short-term trading action, I see it pushing off of this 2087 area and trying to come back down. It looks like it's got a little bit of room to maybe hold at 2078, 2075, and then punch up, but do not think that this breakout is going to hold without confirmation. We've got to let it confirm. We've got no trend. We're completely range bound, and right now we've got a ton of technical momentum that's still weighing heavy on these charts. We're sitting under the 50 simple moving average on the day for the ES, and a lot of things flashing warning signals to me that say, hey, listen, if I do take a long off the bounce, I'm going to be trading it level to level into a resistance area that I anticipate.
Anne-Marie, you know what's concerning to me, and I was just as you were talking, I was looking through a few of the European banks here this morning, is every time we had a rumor that there was going to be a deal with a Greece deal, you saw the European banks really catch a bit off. And I mean, even Friday, you saw Deutsche Bank rally over $1 on this news. I'm looking at some of these this morning, like UBS, trading up only 8 cents. I'm looking at Deutsche Bank, trading up only 50 cents. I'm thinking a lot of this was already kind of baked in from Friday here, and I'm somewhat concerned. We're seeing our U.S. banks trade up significantly on this news. Something like J.P. Morgan, Citigroup are trading up over 1% here this morning, but with the European banks not looking nearly as strong, is that concerning to you?
Well, that's a great observation. I had not looked at it, and I had not even considered it until you just said it. But as you're saying it, it certainly does resonate. They are closer to the problem we anticipate. And then, you never know what's going to go on in these spaces. So for me, that's a really good indicator of having a very close eye on watching things slip into resistance. For me, I never trade a breakout. I always trade the retest of a breakout that holds, particularly for swing environment. And so, if they are only creeping up and all their moves were already baked in from Friday, then, that's maybe another signal that we are sitting in a space that's likely to give back versus advance. And we certainly have been stalled out for the last few hours.
Let's move on to some of these upgrades and downgrades here today. And we've got Apple getting upgraded here at SocGen. They're raising their price target up to 140. Last week we saw everybody selling Apple as it took out the bottom of the trading range there, got all the way down to $119. Caught a bit on Friday though and actually held up quite well, went all the way back up to 124. This morning here we are approaching 125. What are your thoughts on Apple? Because we did breach the support area there down at 122, but now we're back above it here again. Technically speaking, where do you think Apple's going?
Well, Apple was in a range for quite a while, right? It got into the Dow, and then it just sort of stalled out. You and Joel were talking about, how that didn't bode well for most charts that got into that space, and so Apple really did follow suit. So it fell out of the range, and again, it falls back into the space of taking a swing trade. You don't take that breakout or breakdown. If you're looking for continuation, you wait for the retest and failure of that level. So now what we've done is actually catapulted ourselves right back into the bottom of this trading range. So the question here is really a do or die one for this chart. If it holds this area, it has all the potential in the world to move right back up into the top of the trading range to about 130, 132. If it doesn't, meaning that it moves back down underneath 123, it really will be the confirmation of a particular failure in the chart. Again, a lot of negative momentum here. We're coming into earnings. A lot of rumblings going on in Apple right now. So if it's a space where you go, hey, I want to take action, I would say that action would be sit on your hands until this chart solidifies through this area, gets up over maybe 125, comes back down into the 124 area, holds itself, and then you can see it moving back up into the 30. But coming into the earnings, which is just around the bend, it's probably a place to just observe closely rather than position yourself for any kind of swing move.
Anne-Marie, I'd love to get your take technically on Fitbit. I know when Alibaba IPO'd, you came on and you mentioned that even as little as 10 minutes after it starts trading, you've already got some candles that you can look at and kind of analyze. What are you looking at in Fitbit?
Well, this one's really just come out like a house of fire, and it's been sitting at resistance and trying to poke its way out of the top of that range, but in general looks to me like it's getting a little bit exhausted. One of my favorite formations to look at in terms of being able to play is the rising wedge. And so when you see that formation where it rises into a wedge that tightens, you know that momentum is collapsing, and you can sort of see that underneath. I don't think this is any space in the world to say, hey, listen, I'm going to take this and have it hold long. It is in a formation where it's just really a good idea to watch it either stabilize and work off this negative momentum that you're seeing underneath, or anticipate a drop back down into maybe the 40, 50 area, 39, 80 area, something like that, before you end up taking this one to hold for any period of time. This is not in a space where I would say, yeah, everything's in the clear and this chart should move up nicely. Again, if it catches a bid in a rising wedge, things can pop out, but they will always come back down and retest that breakout area. That breakout area looks like about 44.10, something like that. And so that would be the region. If you were saying, hey, listen, I'm going to intraday trade this formation, you could have a shot there. To me, it seems quite weak technically from a momentum perspective. This one is very likely to either drift sideways or drift down into that support area. Once it gets to that 39.80, 39.90 area, you can talk about it again. If a lot of buyers come in at that 40.20, it'll be a great sign for it. But right now, it's taking a breath.
Anne-Marie, what about Alibaba here? The stock got basically killed there last week, along with China. I mean, the Chinese stocks were just getting murdered, but caught a bid finally there. Put in a double bottom almost exactly at 76.21 and 76.22. And then the last couple of days did catch a little bit of a bid, is holding over 80, is up a little bit here this morning again, trading over 81. I did note that does have a 74,000 share buy-in balance here this morning as well, which is putting upward pressure on the stock in the pre-market. What are your technical thoughts on Alibaba?
That might be a big question about, what are your technical thoughts in terms of Chinese markets in general.
Yeah.
Certainly, this was very affected by that space. And so my suspicion is that this beautiful 82 level that held so nicely in the past, and we watched the charts really rocket up from that region in late April, right after that first earnings space. We saw it rocket up there. It came back to test it. It was very lackluster. So 82 really is that region. 82 to 82.80 is an area that I do see a lot of sellers potentially sitting. When is this next earnings space? It's, just a few weeks away. Probably has got pretty fair earnings attached to it, but right now, this chart's under a lot of negative pressure, and so the push into the resistance areas here around 82 probably going to be met with sellers. Here's the thing. Again, because my philosophy is wait for the retest, if it pops up over that 82 and starts holding strength, it's got to somehow come back down into those old areas of prior resistance and create a new support structure before it gives me the clue that it can get back up to that, 86 area. And then we've got, another group of potential sellers taking over right there. Right now, lots of negative momentum. The charts are pushing into resistance, so we ought to see a little bit of upside pressure. But again, this upside pressure looks to me like it's very likely to collapse back down into the support region, potentially near 80, 81. And then if it can hold that area, we'll be able to look at it from a swing perspective. Long end, the trouble right now with traders is that we really, for those of us that like the short-term swing or the intermediate swing, we're almost antsy to find a position somewhere. I got to find a position. I got to find somewhere to put my money. And cash is a very good position. And it's a position that's necessary in a market that's range-bound if you don't want to expose yourself to additional risk. And way too few traders focus on the elimination or reduction of risk and being just a little bit more conservative in an environment that's just filled with yellow lights. It's all flashing yellow. There's nothing that says green for going in any direction. It's all flashing yellow, and you've just got to wait, let the chart stabilize so you don't catch the absolute bottom, so you don't catch the absolute top. That's okay. When you do position yourself properly, you can sit in the trade and have it run with you. And really, so many of the charts are saying that right now. Just hold the phone and let it see how it settles in.
We've been on the line with Anne-Marie Baiynd. She's an author and financial analyst, and she joins us every other Monday morning. Anne-Marie, thank you so much for coming on the show today. We always appreciate your insight and analysis.
A pleasure being here. Good luck trading.
Thanks, Anne-Marie.